The monetary rebellion we've been warning about for years has just gone from theory to reality. Texas is building an actual digital gold payment system to let citizens bypass the Federal Reserve entirely, and you know I like that. Now, this is not symbolic legislation or political posturing. The Texas Comptroller has been instructed to create a platform where residents can deposit gold, receive digital credits, and spend them with debit cards. Florida, Missouri, and other states are racing to launch similar systems. It's a full-scale assault on the dollar's monopoly as money. But Barron's warns of massive challenges. Gold's 15% volatility could make pricing chaos. Federal capital gains taxes create accounting nightmares, and a 2013-style crash could devastate users. Colin Plume, he returns to analyze whether the state rebellion can succeed or if the Federal Reserve will crush it before it threatens their power. Colin, welcome back to the show.
Yeah, thanks, Gary. There's been a lot of talk about different measures like this. Texas did make gold legal tender, Florida made gold legal tender about a month or two ago, which we discussed. So there's a lot of these states that are, looking to get gold in reserves to get paid in gold. The state of Utah has received gold for taxes and payments that are owed to the state. So it's not a new idea. They have a depository there that they could use. I think it's interesting. I think it's an interesting idea that it would be similar to a bank, right? You'd have gold there, and then you could buy things around with the gold, and then they'll just deduct the amount that you have in gold. So I think it makes it accessible. But in my eyes, I'm always concerned about any government agency holding my gold. I don't know what kind of fees they're going to charge. And the big red flag for me is just, why would you want to sell your gold? Like, I would rather sell cash than gold, right? So there's some things that I have trouble with. At the end of the day, I think they're getting prepared for what's happening, is that we're moving away from the dollar. There's this big stablecoin legislation that just passed last week where they're trying to enforce stablecoins and make them an option, a little bit safer. They put some, things in place to make them where they're backed up by the dollar and treasury notes. So everybody's moving away from the dollar, trying to get currency coming back their way. I just don't love the idea of having my gold stored by the state, and also I'd rather keep it gold long term than use it in a transaction. So I think it's good at that.
So basically, we hand in this theory here from Texas, and I shouldn't say it's a theory. It's actually now law.
Yeah.
You can see the tweet on the screen here from Greg Abbott. I signed a law authorizing Texans to use gold and silver as legal tender in day-to-day financial transactions. It fulfills the promise of Article 1, Section 10 of the U.S. Constitution. Now, Colin, I'm no fan of the Federal Reserve, okay? I mean, what they're doing in Washington, D.C., what they've been doing since 1913, I mean, they've got a $700,000 cost overrun on it's now $2.4 billion renovation on that tomb to fiat money. So I'm not a fan of the Federal Reserve. I like anything that's going to go ahead and chip away at their authority. And of course, I'm a big fan of the 10th Amendment, where states have, sovereignty over the federal government in certain cases, and of course goes back to the people. But I'm also not a big fan of, just authority in general. So
right.
it reminds me of when, Roosevelt said, okay, everybody hand over your gold and we're going to give you Federal Reserve notes. So it sounds like This is sort of the same thing on the scale of Texas, where everyone's going to hand over their gold, and then Texas is going to put it in a vault, and then you're going to be able to get a debit card from the state of Texas that says, okay, this is the real-time equation of the real-time calculation of the value of your gold. You can use it in day-to-day transactions. I mean, it sounds great because it does take away power from the Fed, but is this something that we want states to do? I mean, I'm a big fan of when, the Federal Reserve, gets punched in the face.
Yeah.
Powell needs to go. Trump is on his butt right now. He's saying, 8 months from now, he's going to leave. You got fake letters that are circulating saying Powell has officially resigned. Mm-hmm. So anything that, kicks the Federal Reserve in any capacity I enjoy, but what's the feasibility of a system like this?
Yeah, I mean, I think, and it's interesting because you look at a state like Texas, which is a big believer in their own, the people having their own sovereignty, right? They're having their own guns and, really kind of being independent. It's sort of the spirit of the people in Texas. So I have a hard time believing that they're going to want to give their gold to the state. It just, because part of this is that they hand their gold over to the state. It doesn't make it. From what I've seen doing business in Texas for the past 16 years, those people want their gold. They want to hold it. They want to be responsible. They don't need anybody giving them a digital ATM card. This is the last thing that they want to do. But I think some people will do it. It'll be a small amount. It'll give some control to the banks and to the state, and the state would love to have more control over gold and silver as much as they can. Because if we change our currency, gold and silver is going to be a big part of that, and that would give them a huge advantage. I mean, I was talking to somebody recently about if the dollar loses its reserve status, where will gold go? And $30,000-$40,000 an ounce is an easy number. So why wouldn't they want to create an environment where they have access to more gold? So they're creating this, hey, just hand it over to us and we'll give you a debit card and it'll be easy. And, at the end of the day, like owning gold and silver is pretty easy. I got a lot of clients this year that have profited significantly from buying gold and silver from us. And we just buy it back and send them dollars. It's really not, it's not that difficult to do it.
Right.
So I think you're making something more complicated than it needs to be. But there's this big shift in what the next currency is going to be for us in the United States. That's why the stablecoin bill, this genius bill, was passed on Friday.
A lot of people are really concerned about it. Marjorie Taylor Greene, she was concerned it creates the infrastructure for the market piece, biblical prophecy, and then I don't really understand stable coins necessarily. I mean, I understand like Bitcoin. I understand XRP as a backbone for some of the international banking systems for transfers. But is Bitcoin a stable coin, or is XRP a stable coin, or is it? Are banks going to be issuing their own coins backed by whatever's in their vault?
It's another level of control to have a stable coin. And the idea of a stable coin, someone who came up with the idea was like, well, if they sell their crypto, we don't want them going back into cash. Like, let's just put them into another instrument that we make money on. So it's another instrument to profit from, right? It's another way. And it's backed. So this bill basically says that it has to be backed 1-to-1 with short-term treasuries or the US dollar. Well, the US dollar is down 12% this year. So you're buying a 1-to-1 asset that is backed by an asset that went down 12% this year alone. Wow. So I don't see why it helps anybody. I think it creates another way, and it's another way for the government. When you move out of crypto and you take profit, it's another way for them to keep their eyes on you. They want you to move into these assets because they want to get their tax money and they want to keep an eye on where you're moving the money. Everything is just moving they want to keep moving you into assets that they have control over, which is the same idea with Texas, right? Move into this depository that we have. We'll give you a debit card. They want to get access to all of your money. Gold is the last private. Silver, these are private investments. Keep them private. There's private.
That's what Noble Gold Investment specializes in, is assisting people, through the 401ks, through the IRAs, and how to convert those. And also just, specifically just buying gold. I sent you a referral the other day of a prominent celebrity. He texted me. He's like, I want to buy this much gold. I said, well, you got to call Colin. I'll give you his information. And, I hope you guys have been able to communicate. But, tell us about like the specifics, what's the difference? What's the difference between if I'm going to, hold gold personally, I believe you guys also have your own vaults as well, and then there's a state. So
so if we are holding it, it's in a segregated private vault. It's not owned by the government. It's not owned by the state. It's insured. That you pay a nominal fee to have it there. They ship daily. They've been shipping daily. They've been in business for over 30 years. It's segregated storage. We do all these things in a very specific way to protect the investor. The investor is protected in the same. If we ship the gold to you, we ship it to you. And we ship millions and millions of dollars of gold every month, actually.
wow.
And so it gets, we have a very specific way that we ship it. That there's a reason why people are getting hurt in today's economy, that they're not able to keep up, is that they're buying fractions of investments. The only way you build wealth is to own things by yourself. Today's wealth is built in assets and owning assets by yourself or as a family. The families that that are wealthy are handing down assets from heirs. That's how the wealth is built. It's not built on derivatives. It's not built on, right now they're saying in the silver market that the ETF market, they have 375 paper silver contracts for every 1 ounce of silver. That's not how wealth is built. Wealth is built by actually owning the assets by yourself. And if everyone that's watching this, this because the people around you that are actually very wealthy, they've had a legacy of owning a company and buying assets and buying things that they own and passing them down to heirs, like things that have revenue or assets, real or whatever it is, or gold and silver. This is how wealth is generated and not just generated, but it's kept. That's the most important thing when I think about gold. The reason I always tell you got to have gold no matter where the price is that if you look at your buying power, if you go back the last 100 years, there's never been a time that having gold did not keep up with the day-to-day things that you need to buy. It's always kept up. And today's a great example. It's at, $3,400 an ounce. So if you bought gold from us 5 years ago during the pandemic, it was $1,400 an ounce. So the dollar's lost significant value over that time. And now gold's sitting at 3,400. You can buy the same goods and actually more over that 5-year run. That's the idea. It's not the 30% gains. It's like, I want to be able to keep the same lifestyle. I want to be able to, pay for normal things and go on a vacation once in a while. And, if I want to buy a new car or whatever I want to do, I need to be able to keep up, right, with what I've been living with. This is what gold does. That's why, even at 3,400, people, it's so expensive, this and that. It's never not proven to keep up with that. And it's because all the fiat games are all just based on the fact that the dollar will lose value. And that's why you have to have gold in your portfolio. And that's why it's the perfect complement to other things, because it protects you against those things that are happening out there.
Now let's talk about what you sent me, the Barron's article. And in the article, they point out gold's 15% annual volatility. So you mentioned pricing for everyday items, but imagine coffee prices changing daily based on gold swings. Is that even a reality that Barron's is claiming here? I mean, how can states make this work for every transactions? If to me, it sounds like the value of your account would change based on the value of the gold and not the actual price in the coffee shop.
It would change on the value of gold. Yeah. I don't know. In that Barron's article, I don't understand what their volatility comment was about. I mean, the dollar's down 11%. That's volatility too.
Yeah.
Right. The dollar's lost 11% this year. So, that's also volatility, right? It doesn't feel like it because you don't see it in your face the way that you typically, the 11% down comparative to other fiat currencies around the world, which is how they compare the dollar, right? It's compared to other other paper dollars, other, fiat money. So I think that what you have to look at is, they're have an idea to get gold in their vaults, to give you a debit card. I think it's an interesting idea, but ultimately is easy to own gold. We've made it easy. We've made silver easy. And in my book, I talk about it, and we've discussed the arguments for silver breaking out. And I'll tell you this, if you look at, and I'll leave with this, just this one stat about silver that I think makes it interesting. If you look at the 1983 price when the Hunt brothers tried to corner the market of silver, there's thousands of uses since then, thousands since 1983, but the price of silver was $50 in 1983. Guess what, Gary? $50 in 1983 is today's money. What is $50 today?
$50 in what year?
Today. So $50 in 1983. What is $50 today? What's the same buying power for $50?
Oh, I mean, I don't know. You can't buy that much these days with $50.
It's about a little over $200.
Wow.
So when people say to me, why do I feel so bullish? Why do I like silver? If it just gets back to its 1983 price in adjusted dollars, it would be $200 an ounce. We're sitting at $39 today. So
that's insane.
I think these things, as you look back, you go back 20, 30 years, you look at what the dollar could buy, you look at what gold's done, you look at what silver's done. You just got to look in tranches. You got to look in 5 and 10-year tranches of time. And that will tell you everything you need to know as to why you should have physical gold in your holdings, physical silver, physical platinum. Platinum, no one's talking about it. Has anyone talked to platinum? It's up 50% this year. It's up 50%. Has anyone talked about platinum? Is it anywhere on the news? No,
never heard about it.
It's up 50% this year. Wow. So, these are the things that people don't want to talk about because sometimes it's just the simple thing. It's just the right thing.
Do you have access to platinum?
I'm sorry?
Do you have access to platinum?
Absolutely. Yeah.
Oh boy.
Yeah. Yeah. Platinum was sitting at $950, $940 an ounce in December, and it's sitting at $1,430, $1,440 today.
Wow.
Yeah. And it makes sense. I mean, platinum and gold used to be the same price. Now gold's at $3,400. Now platinum's at $1,430.
Well, why the spread now?
Well, central bank buying of gold really pushed the price of gold much higher. Platinum was used in more industries. Palladium took some of those industries, but now platinum's sort of making a comeback now to be more used in catalytic converters. But yeah, palladium went on a massive run, then kind of pulled back, and now palladium's less than platinum. But yeah, gold and platinum for the first 4 or 5 years I did this, 12, 13 years ago, or 15, 16 years ago, platinum and gold were at the same. Now platinum's at $1,430 and gold's at $3,400. So, these are the things that nobody's talking about because they're just simple. It's just a simple thing. They need these things to run the world. Gold, silver, platinum. They need them. They need them in catalytic converters. They need silver and energy and solar.
And that's why people are stealing catalytic converters all over the country.
100%. Yeah, absolutely. Yeah, look at copper. Copper's on fire. So listen, we have guides on gold, silver, platinum specifically. You're going to get a live person like me, friendly person you can talk to. I think that's the advantage of Noble Gold. We have a great reputation. We've been partners with you for way too long, 10 years, I would say at this point.
Oh, yeah.
10 more years. I think it's customer service. We shoot it straight. We're going to tell you, what products to buy, the real thing, no derivatives, no, you're buying the real stuff. You're buying this, you're buying, I bought this during the early pandemic for about 60,000. It's worth 110,000 now.
Oh my goodness.
Yeah. I mean, these are the things that we do every day. Simple. It's just simple. So if anybody's interested, let us know.
Whenever I read the ads on our show, I always say, when Colin answers the phone, you tell him Gary Franchi said hi.
That's right. That's 100% right. Yeah.
Yeah. So this is Colin, everybody, in case you didn't recognize that.
It's the glasses.
I want to go back to 2013 real quick. And folks, as you're watching, if you want to just jump right into it, there's a link in the description, nextnewsgold.com. It'll take you there and get all your answers as well. But in 2013, okay, gold crashed 28%. So what happens to digital gold accounts? Prices just collapse like that.
Yeah, I think that's the downside of having this debit card idea, right? Is that you're sort of banking on having this savings account in gold, and gold drops. And so that's where this whole idea sort of would fall apart for them, right? Because I think people would be upset. Whereas when you think of gold and just putting it away for the long term, if it goes down 28% one year, it's just part of it. You're probably buying more. But if you're using it day to day as like a savings account,
okay, I see.
Yeah, I think that's and that's the issue why Bitcoin, if you think about it, still has not proven itself as an actual currency because it's too volatile. It's the same premise.
Bitcoin is, it's scratching $120,000 right now. Insane.
It's
to watch it just go up and down.
It's become more of a store of value for people. And people have less faith in equities and less faith in the dollar than ever. And I want to go because equities long term are bad. I just think they think it's too inflated. So I think people think Bitcoin's still got room to run, and they feel more. It's just faith. It's confidence. Bitcoin, the whole game is confidence. If you have confidence that it's going to continue to go, you have all this money moving in, it continues to go up. That's all it is to it. But it's not. It has no use. So it's got to be based on confidence.
Well, and that's what a lot of people are doing is they're buying and holding, wherein in your response to the last question was basically if you are relying on gold in a day-to-day transactionary environment on a debit card and it does crash 28%, you've just lost 28% of your buying power. Whereas most people buy gold as a passive investment, like they're buying Bitcoin and they're holding it, whether you're holding it for them or they're holding it personally. It's kind of like, set it and forget it. They buy it and they walk away, and if it does go down, it's like, well, it's still gold. It's still there. I'm not going to worry about it because, it's always going to have its value, and maybe it'll bounce back because the dollar continues to, perform worse against it. So is that a correct assessment?
Gold was the perfect asset to back up a currency. It's the perfect in behind, because if you think about it, like in the year that it dropped 28% in 2023, that's when the central banks really started to buy. So if we still had gold backing our dollars and the US government said, okay, well, it's down a lot, this is a good year to buy. Could you imagine where we would be if we had bought gold like all the other countries in the world over the last 3 years? How much better off we would be if we had more gold in our reserve than just treasuries and everything else that we're spinning off. So it's good in the second position, gold. And you got to have a fiat out there to day-to-day trade. But having it in a first position does, you have the volatility day-to-day that you have to deal with. So I think we had the perfect system. We just blew it. So
yeah. Well, we can thank FDR and Nixon for that. But we're talking about states now who are recognizing the Constitution, like Abbott, also like Texas and Florida, Missouri.
Yeah.
Do you think this is a coordinated rebellion against the Federal Reserve's control?
Absolutely. Yeah, absolutely. I think it is. It's a way to make the states more solvent and more profitable. It's a good strategy. It's a smart strategy. And I think if you want to make your state stronger, you lower taxes and you give your citizens a way to make more wealth. And so by making gold and silver legal tender in Texas and in Florida, you're saying like, buy gold here, transact with gold here in our state. That makes the people of that state wealthier. And the wealthier your state is, the better it is. The more wealth people have, There it is. And that's why people are moving to all these red states, because those people have more wealth, personal wealth.
And plus those state treasuries are now going to be holding more gold than the next state.
Yep. And it's good for them too. It's a win-win. So yeah, I think it will continue to get pushed forward. You'll see more states continue to do this. And they'll profit from it in the long term. They'll continue to profit from having it in reserve. And they're basically taking the helm that the federal government should have done.
Okay, so let me ask you this.
All these years. History
shows that the federal government does not tolerate monetary competition. The Fed does not like competition. We see this Genius Act come out. We see the talk of stablecoins. Obviously there's concern about these things with the control and the surveillance aspect. Some are saying it's not going to have government control. It's going to be more privatized. But we've even seen, the debanking of individuals before stablecoins have ever existed. I digress, but do you think like this Genius Act and what Trump just passed, is this some kind of a reaction perhaps to what these states are doing with gold?
Yeah, I think it is. And it's really just a way to get more money into US Treasuries. The biggest advantage of this Genius Act and more people buying stablecoins is that it will be partially backed by US Treasuries. And we know that we need more buyers of US Treasuries. That's the biggest problem with our economy today, is that nobody wants to buy our terrible debt. And you saw it today, because US Treasuries, there was a demand today for US Treasuries. It's shifting. President Trump, his biggest goal for him against Powell is that he wants to get debt cheaper. The only way you get debt cheaper is you get people buying more Treasury bonds. And what we know is that central banks are not buying our US Treasury bonds the way that they used to. It's shrinking considerably. So he's finding creative ways to get new buyers of Treasury bonds, in the hopes that our Treasury bond values, those returns go from 4.5, 4.6 to 3.25 or 3%. Because if there's more buyers of the US Treasuries, it brings the price down. And by him bringing the price down, that means the 30-year mortgage goes down. That means debt goes down. That means mortgage, everything goes down, and it puts it in a much better position. Yeah, there's a good example that silver stackers.
I wanted to ask you about this. Because I saw this come across my feed. This guy, Mr. Uppy, says, I think I'm no longer just a gold bug. Price per ounce of silver, if all paper was converted to physical, $13,780. He says, what we're about to see is real. Silver stackers, is your time to shine. So what does this mean? 409 to 1, paper real. What's going on here?
What does
this mean?
Futures, options, swaps, forwards, derivatives, and ETFs. There is that many of paper contracts backed by just 1 ounce of silver.
That's insane.
And that's gone up dramatically over the last few years. It used to be in the 250 range. It's gone up by like 40%. There is a breaking point for that. And once that breaks out, and we saw it earlier, Gary, you remember this year. This is what happened with gold, right? In the London Bullion Exchange, the same thing was happening. When Trump got elected, everybody bought paper gold. Then they realized in January, wait a minute, I don't want paper gold. I want real gold. Well, wait a minute, I want to call that contract. Well, wait a minute, they don't have my gold. The same thing is happening in silver right now. It's the same dynamic. So if you're not paying attention to this, you should be. I mean, that number is unbelievable. $13,000 for silver.
So this guy here, silver just hit 39.60, July 22nd, 2025, flirting with a 14-year high. Retail's cheering, shorters are sweating, COMEX is pretending nothing's happening. So, look at this chart here. Silver futures, this is silver futures chart. And then we have this, again, a silver futures chart. Can you explain what we're looking at here?
Yeah, I mean, there's a cup and handle, like a 50-year cup and handle chart that shows the price of silver, like where the breakout is. The breakout number for silver for the last few months was like 34, 35. That was like, if it breaks that, it will continue to go higher. And then the next resistance level that I see from a lot of the traders is like $45, $46. So we still got some room there. But yeah, I mean, silver touching on almost 40. Silver in December was at $29. So we're up $10 in 7 months. So yeah, I mean, you can see it there on the chart. The demand is high. It makes sense. If you look at where gold is, the gold to silver ratio is at 89 now. I think it'll go, it'll get closer to 60 to 1. If you look at silver gold ratio during 2011, which was the last really massive run in silver.
I remember that because we were minting gold. We were minting gold and silver rounds at that time, commemorative, and I had to get out of the market because our price point was 50 per, and our margins were shot at that point.
Yeah, and also the price of the physical goes when you go on this kind of massive bull run. The physical price goes well above the spot price, as you know, and so you'll see situations where, that's an interesting, the Big Short for it. So what he's talking about here is that the bullion banks and the institutional banks, they've been shorting silver. And so a lot of them are getting destroyed by this increase, which that makes me happy to see that. So they've been shorting silver. So every time silver goes up $1, there's like $300 or $400 million lost by these large institutions. So yeah, these are all the reasons why you want real silver. You don't want to get into paper silver or derivatives because you see what the banks have done. They're just getting destroyed right now with the price continuing to go up.
Why is Wall Street Silver saying this? Pro tip, any silver below spot price is fake silver. If silver is in a plastic case, it's overpriced. Don't buy it. Buy the cheapest silver you can find, but never buy below spot. What does he mean by this?
Because you can't buy it below the spot price. So it's what happens is like someone will call me and say, I see this price on eBay. It's like $3 below the spot price. And I say, well, can you buy 1 ounce? And I said, yeah. I said, buy it. And then they buy it and they find out that it's fake.
Fake? Like straight up fake? Like a fake round? Fake coin?
Absolutely. Yeah. Yeah.
Oh, wow.
Yeah. It doesn't have the purity. It's made with something else. Yeah. I mean,
a plastic case to me means that it's it's some sort of numismatic and not necessarily something that's more of just a silver.
Yeah,
piece.
I mean you want to keep silver in a plastic case or a tube if you can, because it oxidizes. You can spar as a good example. See, because I didn't keep it I took it out of the plastic case. See how it looks. If you keep it in the case, if you keep it in the plastic, see how it looks.
So,
it just it oxidizes, but it doesn't matter. The value's still there. But yeah, I mean, you can't buy it below the spot price, but prices are unbelievable right now for ounces and rounds. I mean, we're getting it at the best prices that I bought it probably in my, and obviously just passing that on to clients. So, cause we do so much in silver bars, like we get such unbelievable deals on these. So yeah, I mean, listen, they're talking about it. They're talking about the shortage. They're talking about the ETF market and the leverage market. Those are all the things that we protect you from, that you don't have to get involved with. You just call. There we go. Rarest and most bullish long-term patterns ever seen in commodities. Yeah, there's the cup and handle. See that? Go down there.
Yeah.
That's the cup and handle right there.
What does that mean?
So that's basically, those are the breakout points here. This is a 50-year. The cup is the big one and the handle is a small one.
Oh.
And you can see this price. And once it breaks above that, then it can go into a really massive run. So we've broken through, and that cup and handle is the chart that illustrates. Now we've broken through that price point. Now the next price point is, 46, 45, and, time will tell what happens there. But you're looking at a pretty massive potential surge because we've hit above that target point there.
Wow.
Yeah, that's a classic trader analysis, is the cup and handle, and you're seeing it. It literally almost fits perfect.
Yeah, it really does. It really does.
Yeah, so that's one of a multitude of reasons. I mean, I get into it in my book too. I talk about all the reasons that I'm excited about silver. But yeah, it's a great time to be in commodities right now. And you know what? I always say this to people: it's never too late to learn, and let us help you. Let us teach you. Talk to a live person that own gold and silver. The guys that work for us, they own gold and silver. I mean, one of my top guys, I was at his safe a few months ago. I mean, the amount of gold and silver this guy has, unbelievable amount. Young guy, early 30s, stacks and stacks amount of platinum. Our staff really, they love this stuff. They own it. They're into it. This isn't just something that we're out there and selling. Like this is part of who we are. And a big part of it is just giving people access to an asset that will help them build wealth and also protect them, because there's so many things out there that are happening to people day to day, scams, different things. Like, this is the real deal. You're going to get real gold and silver. You don't have to worry about, we ship it to you. You don't have to worry about what if noble gold flies off the face of the earth. It doesn't matter. You're getting the real thing. And I deal with that every day because I'm buying back metals from, companies that are no longer in business, but they sold them gold and silver, and, we buy it back from them if they need to liquidate it. So you're buying the real thing. This is my company, family business. So just, we're here to help and answer
And
questions.
this is your offer right now, limited time. Can you tell us more about that?
Yeah, so you get 2 5-ounce these coins, the America the Beautiful, with any qualified IRA. So that's these. These are a limited edition 5-ounce America the Beautiful coin on the back. So it looks like a big quarter. And then on the back, it has a national park, many different national parks. And these are limited supply, great coins. So when you do the IRA with us, or if you do any large cash purchase, we'll ship these 2 coins to your doorstep directly.
Yeah, the ad that we display on the show, it's a little deceiving because, it's this image here with the quarter, and it's easy for people to say, oh, it's just a quarter, not recognizing the size of it. But the fact that you showed it there, I mean, it's a sizable piece.
Yeah, it's like a hockey puck.
Yeah, it's enormous. And I want to point out that the link's in the description. You can get a hold of Colin and his crew at nextnewsgold.com. And also follow him on X. Follow Noble Gold Investments on X. He just published a video 3 hours ago about how the Genius Act will affect gold prices. So looks like another great interview you just did. Touching on some of the things we touched on here. I'm sure you go into more detail. So great follow on X and, of course, on YouTube. Colin, any other thoughts for our viewers today?
No, great to see you, Gary. Always fun. And looking forward to seeing it in a few weeks. And just, again, thanks for the partnership. It's always fun to chat.
It's always fun to have you here. It's always fun to learn more, especially the state of the economy, with the tariffs and this new bill. You always help me digest what's happening too. So you're a wealth of information, and we thank you for everything and your support of our channel here.
Absolutely. I love this channel.
Thanks, Colin. We'll see you soon. All right. Colin Plume has just revealed the most significant challenge to Federal Reserve power in our lifetime. Now, states aren't just talking about sound money. They're actually building the infrastructure to make it a reality. Digital gold platforms, debit cards, parallel payment systems. This is monetary secession in action. Yet the challenges are real. Volatility, taxes, federal opposition, the Genius Act could derail some of these efforts. But when states like Texas commit resources to building actual alternatives to the dollar, we've crossed a historic threshold. Now, the rebellion against currency debasement has already begun. Now, whether through state digital platforms or personal precious metals ownerships, which Noble Gold Investments specializes in, Americans finally have a path to escape the Federal Reserve's monopoly. So the question isn't whether to participate, but how quickly you position yourself before the confrontations between state and federal power explodes. So the link is in the description. It is nextnewsgold.com, or you can call the number 877-646-5347 to learn how Noble Gold can help you prepare for America's monetary transformation.